Gentlemen, for the World on Finance with your host, Mr. Everett James. Hey, Ev,
Yes. Good morning. How are you? How am I coming in from the West Coast?
loud and clear, loud and
Oh,
clear.
that's
Okay,
wonderful.
so hey, welcome back. Hey, welcome back. This is your first show in 2026.
Yes, that's that. Hey, that is absolutely correct. Yes, I have been off on vacation for a solid month, and happy to be back with the listening audience.
All right. Okay, so what's on the agenda today?
Okay, well, now, the first thing, of course, is we're going to give due respect and a general invitation to the listening public to support a baseball team. After a
Okay.
brief reintroduction of those of that special funding, we're going to take a look at the current possibility of another government shutdown. Only this time, it's really going to. It probably most like it will be a partial shutdown, primarily affecting the homeland security areas. And then we'll take a look at some of the major changes in the big, beautiful bill that got passed this past July, and take a look at some of the things that our filers should be aware of since we are now in the 2026 tax filing season.
Okay. All right. I'll step aside.
Thank you so much,
All right,
Mr. Barrett, and welcome, listening audience. This is Everett James, your trusty tax reporter, who comes on every week, Wednesday at 10 a.m. on the West Coast, 1 p.m. on the East Coast. And really, we really do reach out, for your participation. And there will be, special benefits for those who take this opportunity. We're looking forward to your questions. We're looking forward to your comments. For questions that involve actual filing processes, this reporter will make every effort to respond to the questions at the very next tax reporting session on Wednesday. So, with that, a brief recognition of a team of 9 and 10-year-olds that has blossomed. The team thus far has been funded pretty much by the parents, of the team. I should say funded mostly by the couple, Jason and Cicely Wooten. That's spelled Wooten. Cicely pretty much runs the office, Cecily, but Cicely and her husband, Jason Wooten, Wooten, their phone number for contributions is 951-534-3838. Again, 951-534-3838. And they are hoping to complete the necessary requirements to establish themselves as a not-for-profit organization, and is reaching out to you, good-hearted folks, to help pay expenses, in the form of uniforms, in the formats, and for hotel stays for the parents of the team, and the team members themselves. They have done so well that they've actually been approved for playing in some of the special tournaments out of state. They're actually located right here in Southern California. They've been Jason and Cicely Wooten, Wooten. They've been really funding the team since 2023. They are reaching out for help because the leagues that they play in are generally costing approximately $150 to $200 a month. They've been fortunate enough to have a sponsor purchase and reserve hotel rooms needed for the team and the parents. Another sponsor purchased the team jerseys, and lastly, the tournament itself, out-of-state tournament itself, has in the past sponsored the team by waiving the cost for free. So we're looking for sponsors in any form of help. It doesn't have to be in cash donations. They'd love to have matching team cleats, helmets, team jerseys, batting gloves, and they're also trying to get a team matching equipment bags. If somebody would be willing to do that, that would be so beautiful. It's important to keep in mind that the tournaments that they play in are not free. And thus far, the Mr. and Mrs. Wooten, Wooten, have been bearing the cost. So please, folks, consider some type of contribution for this very, very deserving team. And their number again is area code 951-534-3838. Again, 951-534-3838. Okay, so we're good luck to them in a tournament that they're playing in at the end of February. They'll be playing again in an out of town tournament in Arizona. Okay, what are the odds of a government shutdown? Well, they're not. The odds of a government shutdown seem to be getting higher and higher. Beginning, believe it or not, folks, this weekend. There's a lot of pessimism as a Senate vote. A Senate vote this week appears to be very unlikely. Congress is sprinting to reach a deal on DHS funding. DHS, what is that? Department of Homeland Security. But they're trying to reach some agreement on that particular department. The Senate is back. Has returned as of yesterday, February 10th. But the odds of another shutdown, which would take place February 14th, which is this Valentine's Day, this Saturday. But the odds are that we're going to experience another shutdown, this time a partial shutdown of the Department of Homeland Security. That would happen on this Friday at midnight. And it's, according to some of the predictions, the odds of another shutdown are extremely high. A vote by Congress this week, it really does appear very, very unlikely, unfortunately. And that's And that's a shame. Um, the the vote itself um, is really being held up over the proposed ICE reforms. What is ICE? Immigration and Custom Enforcement. But the my Senate Minority Leader Chuck Schumer and the House Democratic Leader Hakeem Jeffries are in a battle with the Democratic side pushing for tightened ICE warrant requirements and pushing for changes in the mask that ICE agents wear. That's quite a expectation when the uniforms that are worn. That's something that's being provided by the government, and it cannot, legislatively, be changed. Would not likely to be changed when the funding organizations is the U.S. government. The Senate Republicans, led by Senate Minority Leader John Thune, that's Thune, indicates that they're still hopeful to tee up a temporary continuing resolution, another CR, this week, hoping to extend the Department of Homeland Security funding past Friday's deadline. So that's coming up, wow, 2 days from now. So the next government shutdown would affect the agencies, including Immigration and Custom Enforcement, which is ICE, Customs and Border Protection, which is abbreviated with CBC, the Federal Emergency Management Agency, Transportation Security Administration, TSA, which handles our transportation across the nation, and the Coast Guard. Most people are hoping that a resolution between the two sides of the aisle would take place. But it does have to. And this 2026 appropriations bill, really needs to pass by this Friday, February 13th, to avoid a partial shutdown. And so we're hoping that, that takes place. As I mentioned, the odds are not good that this will actually take place. So this reporter will keep you up to date on a weekly basis on the shutdown being avoided. Okay, let's review some of the more significant changes or highlights. In the One Big Beautiful Bill that just got passed July 4th of last year. And for one, there is a new Trump tax savings account for children. It's called it's a tax advantaged savings account for young children who have a Social Security number and who are under the age of 18. The Trump accounts were enacted under the One Big Beautiful Bill. Actually, what they are, they're actually just traditional IRAs with some distinctions. First, the parents of the children must elect to open a Trump account. The Treasury Department will be creating an account for the child, which the parent will then be able to activate and then open up. To opt in, parents either file file a new Form 4547 form or sign up through an online government portal. IRS, however, has only released a draft form 4547, and this portal really is not going to be ready until mid 2026. So we have a few months before access to this new benefit will be ready to go. What are some of the benefits? Well, the government will be contributing $1,000 to each Trump account set up for children who are born after 2024 and before 2029. So again, the time restriction is here that the child has to be born in 2025 through or but before 2029. So 26, 27, 28. So that's about 4 years that the accounts will be able to be set up. The government will be contributing $1,000 to each Trump account. Wow. This is a one-time contribution. The parents must opt into it, and they will be using the same method as opening the account. Some other things about this Trump savings account for young children. Wow. So the government's going to kick in initially $1,000 for each child. However, up to $5,000 of additional money can be put in the account each year. And that will continue until the child reaches age 18. Now, of this amount, up to $2,500 can be funded tax-free by an employer of the parent or the beneficiary. The $5,000 figure is going to be adjusted every year to account for inflation. Now, one thing that if the parents do open up an account, or relatives do open up an account, they can get the benefit of this, but they cannot deduct their contributions to the Trump account. That is, they can't deduct their contributions as charitable. So that's really great. Now there's about 3 more points. In addition, certain general contributions can be made by states, localities, the United States, and also by 501(c)(3)s, tax-exempt groups for members of a class of beneficiaries. So it's interesting that the government did receive a gift to put in extra money into the Trump accounts. Some of the folks who gifted money for these accounts, Michael Dell, founder of Dell Technology, and his wife Susan, they pledged $6.25 billion to fund the Trump accounts, and that was for 25 million children up to age 10 who live in zip codes with a median income below $150,000. Wow. These kids will get $250 added to their accounts. That's the beautiful charitable act. Again, by Michael Dell, who's founder of the Dell Technology, and his wife Susan. 3 more points about the contributions to the Trump accounts. These contributions are not taxable to the beneficiary. Qualified general contributions, pay-ins by employers, and $1,000 pay-in by the U.S. don't create basis in the accounts. Plus, contributions to Trump accounts cannot be made before, and here's that date. And I was, we're warning you about before July 4th of 2026. So you can't make any contributions before July 4th of this year. The Trump account funds can be invested only in stock mutual funds or exchange traded funds that track an index of primarily U.S. companies such as Standard and Poor, 500 stock index, and they can be. This can only take place until the beneficiary reaches age 18. Now, contributions generally cannot be taken while the beneficiary is younger than 18. Starting in the year the beneficiary turns 18, any distributions are taxed in a manner similar to rules that apply to withdrawals from traditional IRAs. For example, distributions of amounts that are allocable to its basis are not taxed, while distributions of earnings, however, are subject to income tax. In addition, taxable payouts before age 59 and a half might be hit with a 10% penalty, but there are key exceptions to this. Also, a Trump account may be rolled over to a traditional IRA for the same beneficiary or certain other retirement accounts in or after the year the beneficiary turns 18. So there's additional things to keep in mind. Regarding healthcare, Congress did run out of time to extend the expansions of the premium tax credit, for those who were covered by the Affordable Care Act. At least for now, Democrats and GOPers won't be able to reach a deal, despite some bipartisan proposals from lawmakers to help break the impasse. So the expansions to the Obamacare subsidies, well, as you have heard and noted on the news, they expired December 31st of last year. The premium tax credit is for eligible people who buy health insurance through the marketplace. Temporary easings, which were enacted during the height of the COVID pandemic and later renewed, they really did end after the end of 2025. As a result, fewer people will qualify for the premium tax credit, and the credit itself will be lower, making health insurance unaffordable for a lot of taxpayers. Now, a deal could still be hammered out in early 2026, but it might be too late for individuals who are now going to be seeking marketplace coverage for 2026. And seeing that they either no longer qualify for the premium tax credit or the credit amount is actually lower than in prior years, making their 2026 premiums higher than expected. One lawmaker wants to let all taxpayers deduct their medical costs. Wow. But currently, as you know, the only ones who are filing taxes and who itemize, only the taxpayers who itemize on Schedule A can deduct medical expenses, and only to the extent that total medical expenses exceed 7.5% of your adjusted gross income. For that rule has been in effect for more years than this tax practitioner has been alive. Senator Josh Hawley, a Republican from Missouri, has a new bill that would let non-itemizers deduct up to $25,000 of their medicals expenses, and would get rid of the 7.5% AGI haircut. So now this is not a law. This is just something that the Josh Hawley is proposing. But don't. That's not a. That's the idea of letting taxpayers deduct all of their medical expenses. That's just something that's been proposed by Senator Josh Hawley, Hawley, from the great state of Missouri. So the keep in mind that the taxpayers whose filing deadlines are extended due to a disaster, they get relief. IRS often postpones the time to file your return for taxpayers located in areas impacted by federally declared disasters, such as hurricanes, widespread flooding, and wildfires. A bill passed by Congress also postpones a 3-year period for which taxpayers can file amended returns to claim refunds by the same amount of time as the disaster-based filing deadline extension. Keep in mind that there are special rules, very tax advantage rules that would make it possible to ease the impact of a disaster. There is a Senate proposal now that is just a proposal, but it is something that the Senate is batting around. And wouldn't you believe it? It would create a $2,000 credit for certain caregivers who care for family members who are older than 55. Now, this is, of course, in response to the huge number of folks who are 65, who reach age 65 or older. I mean, that group, wow, is a major grouping in the age categories of American citizens. And it's certainly something that this a reporter would support, and I'm sure most people would support. But it's coming from the Senate, and it could, if passed, create a $2,000 credit for certain caregivers who care for family members who are older than 55 and who require assistance with daily living tasks and who actually live in the same residence. So the criteria to be able to access and benefit from that credit, it would be that the family member has to be older than 55. Number two requires assistance with daily living tasks. Such things as ambulating, eating, handling, passing their bodily waste, who may need help with eating and with bathing and dressing. To qualify for this kind of a credit, the caregiver would have to give at least 10 hours of assistance to his or her relative each week. That could include, as I mentioned, dressing, driving, cooking, helping with finances, etc. The credit would phase out at AGIs, however. There is a phase-out amount of $50,000 rather, for joint filers, and $75,000 for folks who are filing as single persons. Just as a reminder, folks, you cannot claim your household pet as a dependent on your tax return. But, some folks still try it anyway. A lady filed a lawsuit against the U.S. on behalf of herself and her dog. Finnegan was the name. She stated that domestic companion animals should be recognized as dependents under the tax code, and cites two amendments to the United States Constitution. Well, the case is currently in the discovery process of litigation, but she'll fail on the merits. And despite the adage that a dog is a man's best friend, a dog is neither a qualifying child nor a qualifying relative. At this point, let's review the new tax breaks for qualified tips and overtime pay. And that was all part of the one big beautiful bill that got passed last July of last year, July 4th, as a matter of fact. Individuals can deduct up to $25,000 of qualified tips and then up to $12,500 a qualified overtime pay. These new deductions are available for taxpayers who claim standard deductions and those who itemize. So, you can claim those credits, whether you deduct, whether you itemize your return, or whether you just take the standard deduction. It goes both ways. Both write-offs are below the line. And what does that mean? Well, it means that they are subtracted from your adjusted gross income to arrive at taxable income. They do, however, there is a phase out, however, and those write-offs phase out at modified adjusted gross income over $300,000 for joint filers and $150,000 for other filers. For this purpose, modified adjusted gross income is your AGI, adjusted gross income, plus any foreign earned income exclusion, foreign housing exclusion, and certain income excluded just because it was received from sources in Puerto Rico, Guam, American Samoa, or the Northern Mariana Islands. Filers should use Schedule 1A to compute modified AGI and claim these deductions. Now, the Schedule 1A is not new this year, but it is relatively new. But keep in mind that that will help you to claim the deductions. And that's an additional schedule it has been recently adopted to use in actually doing the computation to get to a modified AGI question, to answer that AGI, a modified AGI question. The employers do not need to separately report tips and overtime on 2025 W-2s. Despite what the law says, IRS is not changing the 2025 W-2s to reflect the statutory rule of separating reporting for these breaks, and it will not impose penalties on employers. IRS will add copies to the 2026 Form W-2 to make it easier for firms to meet the rules. For qualified tips and qualified overtime, they can get clarification from IRS on how to actually compute those deductions. Now, as far as qualified tips are concerned, employees can calculate their tips in one of four ways. So IRS does give you a lot of different ways to come up with, come up with ways to access these great um, uh, improvements in the tax law. Total Social Security tips in box 7. Here's some different ways of doing that. Total Social Security tips in box 7 of the W-2. Total tips reported by the employee on Form 4070. Tips voluntarily reported by the employer in box 14, or the amount on line form at 4137. That's the form used to figure out your Social Security taxes. So again, let me repeat those different ways that you can calculate your tips. You can do it in the Social Security tips in box 7 of the W-2. You can do it reported total tips reported by the employee on Form 4070. You can do it voluntarily reporting the tips in box 14 of the W-2, or the amount on line 4 of Form 4137. That's the form used to figure out your Social Security taxes. Non-employees can use the 1099 miscellaneous, 1099 NEC, 1099K, or any other means, such as receipts, logs that you keep on tips, or earning statements to determine their qualified tips. On dealing with qualified overtime, the law defines qualified overtime compensation as overtime paid under the Fair Labor Standards Act in excess of the regular rate at which the person is employed. Only the portion above the worker's rate qualifies for the write-off. So, for example, the extra 50% for workers who get 1.5 times of their regular pay rate for overtime pay. For 2025, IRS will let employees determine if they are FLSA eligible and use pay stubs, timesheets, etc. to calculate how much of their wages reported on the W-2 is regular pay and how much is overtime pay. If an employer does separately report overtime pay, employees must use that figure. So now regarding how does this affect your state taxes? You know, several states have said they simply will not adopt certain tax breaks in the one big beautiful bill. Wow. I wonder if that has anything to do with the political stance. Other states are expected to follow suit, but there are some states who just simply will not, adopt anything in the one big beautiful bill because it was, as usual, complaints about the president. So if you live or run a business in a state with income taxes, be sure to understand your state's specific tax rules. Regarding business taxes, the tax again finds a hunter's ecotourism activity to be a hobby. For example, the IRS determined that ecotourism activity was a hobby and was not really engaged in for profit. Well, this gentleman, taxpayer, the man owns land in Texas, sells packages for hunting and fishing. For 15 years, folks, he claimed big losses on Schedule F. And that, by the way, that Schedule F, that's for use for farming enterprises. In 2024, the court reviewed factors for determining whether the activity was engaged in for profit and decided the taxpayer really did not have an actual and honest profit motive or honest and profit objective. The taxpayer later asked the court to reconsider the case, claiming IRS's regulations, which set forth the hobby versus for-profit factors, are invalid for various reasons. Well, the court didn't even have to address this point in a second opinion, and instead relied on case law predating the issuance of the regulation to reach the same conclusion, that the taxpayers' ecotourism, that's ECO-TOURISM, that's eco and then tourism activity that well, anything you're in, if you're considered to be an ecotourism activity, you're going to be dead in the water as far as deducting many expenses. C corporations cannot deduct payments of a shareholder's personal expenses. Also, that amount is treated as a constructive distribution to the owners and is taxed as a dividend to the extent the corporation has earnings and profits. A man who owned a controlling stake in a C corporation and had the company reimburse him for some personal living expenses, mainly food and gas. The firm's write-offs are disallowed, were disallowed, and also that he had constructed dividend income. So that was in the tax memoirs under the name Alioto, if I'm pronouncing it right, ALIOTO, TC Memo 2025-125. Okay, so some year-end tax. Do you know the timing rules for gifting a check to a family member or other persons? Well, for a personal check to count as a 2025 gift for gift tax purposes, the recipient must deposit it in 2025. For a cashier's check, however, the person must physically receive it in 2025 for it to count as a 2025 gift, even if the donee waits until 2026 to deposit it. So the timing rules, however, differ for tax-deductible items such as charitable gifts. You need to mail checks by the end of the year to lock in a 2025 tax deduction. But for charges that you made with a bank credit card, you claim the write-off in the year that you charge the expense. So that's these are just little tax tips. By the way, let me identify myself. The Everett James, who can be contacted by phone at 951-522-9877. That's 951-522-9877. And for those more disposed to email, evjtax1 at gmail.com. That's evjtax1 at gmail.com. So another little thing, tip or information, IRS's Criminal Investigation Division pursued more overall cases this past year. It began 2,700 and almost 2,800 cases for fiscal year 2025, compared with 2,667 cases begun in fiscal 2024. So it keeps going up. Certainly in the Criminal Investigation Division, just for your information, it's not getting less busy. They're getting continuously more busy. The Criminal Investigation Division has recommended prosecution on over 70% of its cases and has a what percent conviction rate? 90% conviction rate. So let that be a warning. Again, Criminal Investigation Division keeps getting more overall cases each year. For 2024 rather, it had 2,667 cases. In 2020 for 2025, fiscal 2025, it began another, close to 100, but it began 2,792 cases. So it keeps going up. And keep in mind that the number of prosecutions, over 70% of his cases, and then even at the end, what was the conviction rate? 90%. Among the areas receiving more scrutiny in 2025, what are some of those areas? Abusive tax preparers, the abusive tax return preparers, business fraud, identity theft, money laundering, non-filers, and questionable refunds. Oh, what are some of the areas that receive less scrutiny by the Criminal Investigation Division? Abusive tax schemes, narcotics, pardon me, international operations, public corruption, terrorism, and employment tax ploys. The IRS's criminal agents aren't just working just on tax-related crimes these days. Some agents are being hired to temporarily just work in Washington, D.C., along with the National Guard and other law enforcement personnel, to work on the Safe and Beautiful Task Force. A group of agents have been deployed to work in Memphis, Tennessee. What they are going to be doing in Washington, D.C. or Memphis is unclear, but as you know, Memphis has received a lot of attention because of its level of criminality. Suffice to say, they're not just going after tax cheats. So be alert this year, folks, to IRS impersonation scams. They really do surge at this time of year. Callers will claim to be IRS collectors or agents, and then they'll alter the caller ID readout. Victims are told that you owe taxes and they must buy gift cards and provide the number and the PIN to the scammer. If you get one of these calls or a voicemail, just ignore it. And then, of course, I would certainly recommend providing whatever information on the identity, if you can get it, or phone number of the person who called, or provide that to your tax preparer or CPA. Email phishing scams, that's PHISHING, because I have a feeling that I'm mispronouncing phishing. But email phishing scams involving gift cards are also on the rise this season. These unsolicited emails, they ask recipients for gift cards for family, friends, or coworkers. Wow, that is be happy to repeat some of those little tidbits, tax filing tidbits. Uh, uh, be, Before we close, I just want to remind you about the baseball team that this station or this podcast is supportive of, and hoping, really praying that you will take advantage to help out, the team that are always sharing information about, because they really do need your assistance. And again, their names are Cicely and Jason Wooten. How do you spell Wooten? Wooten. Phone number 951 534 3838. That's 951 534 3838. Last name is Wooten, Wooten. So the 2026 tax filing season is upon us. IRS, has already begun taking 2025 returns, and despite all of the worries and the warnings that the completion of the big, beautiful tax bill passed on July 4th, despite the fears that would create such a horrendous requirement to change, all of the procedures, would create a huge delay in the filing season. Well, apparently, the IRS did some miraculous moves to make certain that the bill itself, the big beautiful bill itself, did not in actuality cause any delay in the filing season. And they actually, IRS actually began taking 2025 returns on January 26th, of this year. So, some tax professionals really did think that the filing season would be delayed because of all that work IRS would have to do to implement that one big beautiful bill. Well, and many of the changes in that bill do apply to the 2025 federal tax returns. So, former IRS Commissioner Billy Long stated last July that IRS was aiming to start the 2026 filing season around President's Day, but instead, IRS employees worked hard to open the season pretty much on time. So, IRS does state that they expect a smooth filing season. There may be some rough patches caused by IRS's diminished workforce, and that I would imagine that would be the major reason for any kind of delay or difficulty in getting your returns accepted and checks paid. But they have had some. They lost 25% of its workers over the last 12 months. The departures represent all experience levels and functions within the IRS, including taxpayer service, collection, IT support, and enforcement. Taxpayers and preparers all have questions on how the OBBB, the one big beautiful bill, how those changes apply in a wide range of scenarios. And they're not likely to get a lot of assistance from IRS. Yes, there will be people answering the phones after a long wait, but getting answers to tax queries is could be considered sometimes as a bit of a pipe dream. Also, look for IRS's actions on taxpayer correspondence. That correspondence is going to be a lot slower than normal. For example, if you're responding to an IRS automated letter or some other IRS inquiry, it'll probably take a long while before you hear back from anyone at the agency. Probably take, we expect the service will reassign some employees to answer the phone lines or assist with filing season tasks. These workers' other duties, however, will just have to simply be put on hold. Now, some experts are saying this year's tax refunds will be bigger than in past years. And thanks, really, in large part, to several new tax breaks for individuals in the OBBB, the one big, beautiful bill. So, what else? Some of those breaks are higher tax standard deductions, the $6,000 write-offs for filers age 65 or older, $12,000 on a joint return if both spouses are 65 or older. Deductions for up to $25,000 of qualified tips, up to $12,000, $500 for qualified overtime compensation, and that would be up to $25,000 on joint returns and $10,000 of interest paid on loans to buy a new car. Plus the increase in the limitation on deducting state and local taxes on Schedule A. Now, it had, been, is $40,000, just the state and local taxes as a deduction. So, we'll be monitoring this closely and keeping you up to date. You might note this change in IRS's processing of tax refunds. Well, IRS is phasing out paper refund checks, and they're doing that to comply with an executive order from the White House. Beginning this year, the agency will generally pay tax refunds to individuals only, only by bank account information, or request an exemption. If you request an exemption, you could face delayed refunds. IRS is urging folks without bank accounts just to go out and buy one, or open one, rather. The Social Security Administration is offering the option of prepaid debit cards to beneficiaries. But IRS isn't yet doing that, shipping out prepaid debit cards, but I guess Social Security Administration is offering folks that opportunity to get their payment via prepaid debit cards. Now, it appears you can still continue to pay your taxes with a paper check. Yeah. Now, IRS, though, is urging taxpayers nonetheless to use the alternative methods to pay their federal taxes, such as electronic payments, debit cards, or credit cards. It will still, despite their preference in how the money is transferred, it will still accept paper checks sent in the mail as payments for taxes. So again, despite all of the heavy demands by IRS to do everything electronically, they will still accept paper checks if you in your effort to pay your taxes. So many predictors of tax changes predicted accepting paper checks is not something IRS is going to refuse to do. So the fastest way, of course, to get your tax refund is file early, file electronically, and request that the money be deposited directly into your bank account. And though it doesn't seem likely, you would be amazed at the number of of automatic deposits that go awry simply because the numbers were entered incorrectly. So check those numbers several times before you file your return and request electronic deposit. Check them several times because this reporter has experience having a number somehow inputted incorrectly and going through over a month delay in getting the refund to the customer. So so keep in mind again, the as we mentioned earlier, IRS generally won't pay refunds in the form of paper checks. So make sure it's that you do it electronically. And they will pay most refunds within 21 days of a taxpayer's filing his or her return. So, but there are some common situations in which refunds can be delayed. But keep in mind that the best way to do it is electronically. Okay, folks, it looks as though we have concluded our hour with you this week. Happy to be back with you, and we'll be looking forward to your comments and questions next Wednesday, 10 a.m. in the morning on the West Coast and 1 p.m. on the East Coast.
All right. Hey, thanks a lot, Ev. And guys,
Thank
make
you.
sure you come back tonight for
Yes.
Cultural Excellence at 15 p.m. on the West Coast and 8:15 on the East. Enjoy your Wednesday.